All right, what's going on, guys? Today's Tuesday. Although you can hear from my voice that I've been talking a lot for the past few weeks, even though I have a sore throat. So my voice is a little bit, iffy a little bit. But anyway, let's talk about today's news. I think today's the biggest thing that we have to actually look out for would be CPI. And something that I'm actually a little bit happy about, okay, is over here you can see that on my CPI video. Okay, hold on, let me just do this. You can see that I got 84 views. I'm actually quite happy about this. I'm quite surprised because I actually made this video for what do I actually expect on the 12th of April, which is today, for the inflation expectation for our CPI. I'm very, very happy. I don't know why this video suddenly popped off. This is one of my best performing video, surprisingly. But yeah, so today we have to be talking about the CPI, and I think that's one of the most important things that we are actually all looking at. Okay, on top of the Russia-Ukraine situation that we have all been mind-boggling about for the past few months now, actually, and of course with China going through new lockdowns, possible nuclear deterrent against the US, and of course with a lot of weird regulatory real estate danger and such. China is not exactly in a very, very safe spot either. Okay, and right now, of course, we also have a global crisis. Okay, the pandemic is not over yet. Today, we are going to have even more news on what actually is happening with this current pandemic. There's new evolvement in this current situation as well. So, of course, alongside with supply chain issues, we also have hyperinflation economy, a hyperinflated economy right now in the whole market, which is why CPI is so important. Today, the market is actually expecting 1.1% month-over-month basis for us to actually see an increment. Of course, personally, I do think that we are going to be seeing about 1% or so, which I also said in the video, which is my expectation for CPI. I do see it as about 1% or so, which is why I'm a little bit cautious about it, because I do think that if we suddenly see a 1.3% or even 1.4%, okay, it's going to be the highest month-over-month inflation data that we have in a very, very long time. Okay, we're not just talking about year-over-year, we're talking about month-over-month. It haven't been like any time since we actually seen a 1%. It has always been 0.8, 0.4, 0.6, 0.9%. And if today we actually see 1.2%, 1.3%, 1.4%, that's going to be something very, very dangerous for the market, because the market would think that, if inflation is going to be that high, there's a very, very good chance that the Federal Reserve is going to be slamming way harder on the increment of the rates. Okay, Jerome Powell for the next FOMC meeting, he can basically just be like, okay, you know what? We're going to do a 75 basis point increment for the interest rates, kind of like rug pulling the whole market in a sense. According to what Brainard would most likely want to do, because I think Brainard also were giving us some form of a hawkish vibe in the past few weeks as well. So of course that's the worry that we have for CPI. And CPI is going to be coming out in about an hour or so at 8:30 p.m. for Singapore time. I think it's 8:30 a.m. for Eastern time as well. So over here, let's cover some news today. All right, so for inflation nearing new 4-decade high in March. Okay, this is kind of crazy because earlier we were actually looking at 7.9% annual rate, which is the year over year, and right now we're actually expecting 8.4% in March. So this is actually quite crazy. We're actually starting to kind of mimic the Paul Volcker era, where we had hyperinflation pressure going everywhere, and then we have two recession in quick succession. In about, I think, 3 years, we had two recession, which kind of seems about right, because we did have the 2020 pandemic recession. And of course, right now, if we're expecting the whole inverted yield curve to be considerably as a form of how we actually see a recession, then we might actually see a recession very, very soon as well. So yes, this might actually be mimicking Paul Volcker's era of a recession for ourselves as well. So I think that's why the market is also overall very, very concerned. So over here, this will mark the 6th straight month for inflation above 6%, and the fastest pace for inflation since 1982 of January. Okay, this was Paul Volcker era. This is Paul Volcker era, right? So that's why, of course, people are very, very worried. Okay, right now, climbed a seasonal adjusted of 1.1% last month from a 0.8% in February. So of course, right now we're expecting it to be even. Personally, I'm expecting it to be about 1.1, 1.2, which is as what I said in the video before. Of course, right now, if we do see 1.3, 1.4, And I'm not going to be lying to you if oil prices continues to spike up as well. Because right now, everything's already priced in. And from what we actually saw back in March, oil prices was actually quite high. Okay, oil prices was up. Nickel was up. Aluminum was up. Palladium was up. Okay, food prices in general, all the wheat, or your meat, or your salad, all of them were up. Okay, and because of all those are up as well, there's a good chance that if food is going to be adding to the pressure of our inflationary accords, okay, we're going to also take into account for energy costs. Okay, at the same time, we also have to take into consideration of supply chains, such as the automobile, okay, and also your rental and such. So all these are going to actually build up for this huge building of CPI that's going to topple very, very soon. And that's why we're very, very worried about inflation actually just chugging it in and then just building it up. That's the kind of the worry that we actually have. So yeah, we're seeing strong inflation momentum across the board, both for goods and services. Okay, like I said before, it's not just your food and such. Okay, your services as well, your rental. Okay, be it your renovation, be it like design work, things of that nature. All of them prices are going up because people's living expenses are going up. Okay, if your living expenses is going up, it just makes it natural. It's a natural progression for people who are charging others to charge higher. It just makes sense. Okay. So yeah, to me, this is a red flag, of course. The other red flag is Russia's invasion of Ukraine and the rise of COVID in China. Like I said before, these two things is very, very important. Okay, later on, we're going to be talking about the Omicron BA1 and BA2 subvariant. That's going to be a whole nother thing. But of course, that is the worry of COVID that we have in China. This time it's going to be in UK and Japan. So that's going to be another concern. Okay, but for the Russia invasion of Ukraine, that's going to be a whole other issue, because the Donbas region, the southeastern, is being attacked basically, and a lot of them are actually trying. For Russia, they're trying to really take over the Donbas area, and a lot of time we actually think that there is a very good chance that the Russian can actually take over the Ukraine area for the Donbas region. So that's kind of where the concern actually comes out from. All right, so inflation aside, because I'll be actually covering the inflation later on as well. I don't think I'll be doing a live stream style. I'll most likely record everything via my iPad, and I'll just do a double upload today for you guys. Okay, so next up, EPA will allow more ethanol in gas this summer in bid to tame prices. So previously, gases with too much ethanol in it were actually banned from being sold in the country. So yeah, existing rule banned gasoline made of 15% ethanol in the summer to cut pollution from the more volatile mix. Okay, but right now, in order for them to actually tame prices, this is actually one of the methods for them to actually bring down the prices a little bit. Hopefully, that all this ethanol gas, even though that they are going to be affecting the climate in the short run, they are able to actually bring the prices down. Which is why this is going to bring up another whole nother set of issue, because when Biden wants to do a rerun for president of the United States, people are going to bring up the fact that Biden, it seems like you don't really care about climate change. Okay, you have AOC by your side, you have Elizabeth Warren by your side, you have Kamala Harris by your side. All of them care about climate change. Biden, even you yourself talked about climate change, how much you want to help with climate change, and all these people have always been targeting Jerome Powell, asking him, when are you going to be using the Federal Reserve Fund to help with climate change? But just because of an invasion in Ukraine by the Russian, okay, oil prices just basically went up, and Biden just basically stood on the side of oil and said that, it's all right, climate change can wait. We need to make sure that the prices stay down. And by no means, and I'm saying that Biden is wrong for doing so, because even if I'm in his role, I would do the same. But you have to understand that he is, of course, in a position of power, okay, and he's going to be rerunning in 2024, I think, okay. And these are going to be ammunition against him during the whole the campaigning season that, of course, I'm going to be enjoying as well. All right, so anyway, let's move on before I lose all my voice. All right, this is quite interesting. Singapore, Lee Hsien Loong wants US against isolating China over Ukraine. I think that he actually made a very, very good point over here. So Lee Hsien Loong actually warned the US against isolating China of the war in Ukraine by framing it as a battle between democracies and autocracies, which should complicate an already fraught relationship between the two powers. Okay, you have to be very careful not to define the problem with Ukraine in such a way that automatically China is already on the wrong side. And this is why I'm saying a lot of time right now for the US, the UK, and the European countries, they're actually a little bit wary. They're a little bit apprehensive to actually go against China at the moment, because right now China is not really doing anything wrong. Okay, China is in a no limits friendship with Russia. That's true, but China is not really helping Russia in a lot of cases. Of course, right now China is starting to really build up their own nuclear deterrent against the US in if possible defense over Taiwan in the future. That's going to be a whole other problem. But right now, if you're talking about Ukraine as a whole, what Lee Hsien Loong is actually saying is that, maybe you guys shouldn't really fault China as much, because China is not really doing much. Okay, if anything, China is just kind of being passive at the moment. So I do think that, this is actually coming from a world leader that knows how to stand on the fence. And that's why I do respect our own country leader. I do think that our leader actually led the country very, very well. I do think that he's actually having the correct mindset. There's no reason for us to actually go too aggressively against that either. So yeah, props to Lee Hsien Loong. Okay. All right. Anyway, next up, let's move on to another big issue, all right, which is the 10-year Treasury yield hit 2.82%, the highest point since December of 2018. All right. So why is this so? This is why this is so bad. Okay, so I made this video of the whole recession, why the Treasury yield inverted curve. Okay, and that's the reason why we are getting a recession. So the higher the 10-year Treasury yield goes, the better it is by right, because the thing is that we do want the 10-year to be higher than the 2-year. But the thing is that right now, the reason why the 10-year Treasury yield is so high is because we don't expect inflation to be stopping anytime soon. That's the reason why the 10-year have to go up so high. Because in order for me to trust in the US Treasury yield at the moment, right now, you have to pay me more, because I don't think that you guys are going to be in a good place in the next 10 years. And that's the reason why they're actually giving 2.82%. Okay, that kind of makes sense. But at the same time, you have to also take into consideration, if it actually gets better, then this 2.82% is going to eventually go down, and people who are holding on to those bonds are going to have it at a better pricing. So of course, this is a good and a bad thing. The good thing is that this is trying to escape out of recession, but at the same time, the reason why this is actually being propped up right now is because this 2.82% is because the market don't seem that in the next 10 years we are going to be getting out of this trouble. And that's why this is so dangerous. Okay, and I'm pretty sure that, the reason a lot of people are actually looking at this, and let's be honest, when the CPI actually do come out, and if we do see something in the upper echelon of 1.2, 1.3, 1.4, there is a good chance that our Treasury yield might hit 3% today. And that's really the big concern that we really have today. Next up, this is also what I wanted to talk about earlier, which is the new Omicron XE COVID variant first detected in the UK spreads to Japan as cases rise. Japan Health Ministry said Monday that the new XE variant first detected in the UK was found in a woman in her 30s who arrived at Narida's airport. Okay, the XE subvariant is a so-called recombinant or mix of the two earlier Omicron strains, BA1 and BA2 subvariant. Okay, right now 1,125 cases of XE has been so far been detected in UK, almost double the previous count according to the latest statistic from the UK Health Security Agency. Of course, I do think that this is going to be some form of a concern in the market. I don't really see a lot of price movement being priced into this current movement at the moment. But of course, I do think that this might come back and bite us in the ass. Let's not forget what happened with Delta, okay? And let's not forget what happened with Omicron. Even though Omicron is this mild disease, this mild variant that did not really kill off a lot of people, at the same time, it was so contagious, it was so viral that almost everyone in the world got it. And there was actually enough of a fear catalyst to actually scare everyone. And right now, with China having a sudden resurgence of COVID cases, there's going to be an additional catalyst for people to actually fear in the market as well. All right, so next up, we also have China stock bounce from Monday's losses as investors watch COVID situation, yen weakening. Okay, so yesterday we actually saw the Chinese stocks actually went down a lot. Okay, I even explained to you guys about the whole 48 hours and things like that. Truth be told, for the Futu puts that I actually bought into yesterday, I actually sold off about half of them at about 41 cents or so. Of course, right now it's worth about 12 cents or so. Of course, it's not the best. At the same time, of course, I do understand that I did make a good profit and such. But at the same time, overall, I'm still a little bit down. I'm down about 23% or 24% ish. So I'll see how it goes, how it plays out today and tomorrow. If anything were to happen, there is a good chance that I might lose about about $3,000 or so. But of course, the same thing goes. Okay, for trading, you win some, you lose some, and sometimes I'm doing quite a risky play. I'm actually risking a lot to expect Futu to actually go down quite heavily. So of course, we do not know how that will actually turn out. So we'll actually have to see for tomorrow and the day after. And of course, because we are also having a shorter week this week, with a Good Friday on Friday. Well, we are going to be having a 4-day week. So of course, I'll be sharing my weekly trades on Thursday instead, because I do understand that you guys do enjoy the weekly trades that I actually post out every week. So yeah, I'll actually move that over to Thursday for you guys. All right, now tomorrow. Well, that's all for the news, actually. Yeah, but I just want to let you guys know tomorrow is Wednesday, and I'll be posting a video about the whole Elon Musk with Twitter situation as a separate video for my weekly 2 videos and such. Of course, I'll also be uploading an additional video later on for the CPI release at about 8:30, 9 o'clock-ish. Once the report is out, I'll just do a commentary over it. I'll go through the whole thing to see what's actually important, what is not. And then I'll upload it to YouTube for you guys. But anyway, that's all I have for today. And I thank you guys so much for watching. I'm going to go and drink some water now. So